Of course, this is not financial advice and for entertainment purposes only.
Investors, welcome a very special guest, Mr. David Jacansky from Quantified Funds with one of their ETFs, that being BTGD, their Quantified Funds 100% Bitcoin plus 100% exposure to gold. Now, in the last 6 months, BTGD has been crushing every ETF in the market, it seems like. It's been crushing IBIT, GLD, the NASDAQ 100, the S&P 500. Now, just this year, in 2025, BTGD is up about 50%, which puts BTGD in the category of one of the best performing ETFs this year. And in my opinion, it could be one of the best performing ETFs in 2026, which is why in this video, I'm going to be going over one of the best ETFs I think could be the best performing fund in 2026. Now, last thing is that in the last year, BTGD is up over 90%, once again providing insane returns to investors by combining the power of Bitcoin and gold in just one fund. Now, I'm going to ask you, David, how do you feel about the performance lately of BTGD, and how do you think it could perform in 2026?
Well, first off, thank you so much for having me on your show. I love your content. I think the concept of building this Bitcoin gold ETF is really why choose between the two. I think the world has really recognized, especially over the last year, these are two of the best store value assets you can find in this world. And as opposed to choosing between one or the other, we wanted to offer a solution that give you access to both, even with a little bit of leverage built into it. So we are actually shorting dollars and adding more to our Bitcoin and gold position. So it's a little bit of a screw you to the system, right? If they're just going to continue to erode the value of our dollars, this is a way to take advantage of that, leverage up, and have access to both Bitcoin and gold without having to choose or sacrifice one for the other. And in doing so, as you can see, we have the ability to basically provide the returns of Bitcoin plus gold minus the cost of financing. And I think that's something we should get on later in the show. But how you get your financing is really important here. And we're accessing it through the futures markets. So our cost of financing is less than 5%. And this is something that for the most part, individual and retail investors just can't get that level of financing. And so it's a prepackaged currency debasement hedge, very cost-effective financing leveraged into it. And as you alluded to, it's been a really, really good start to the year. We're about to turn 1 year old in October. We're up over 90% since inception. And quite frankly, I sound like a broken record, but these are still going to continue to be the two assets that I think have the best scarcity profile in 2025 and 2026 and thereon after. You're seeing central banks print more than ever. Central banks on their balance sheets are more worried about other countries' debt problems, and they're accumulating more Bitcoin and gold. I just saw just this morning, Russia bought more gold this year than they ever before. So they're literally mining gold and buying it directly from the miners within their countries and no longer really allocating to debt for other countries, because I think everyone understands that this massive debt bubble that started in the 70s is really coming to a point where it's just not sustainable. And I think that point of start is really important, because what also happened at that point, that's when the US went off the gold standard. So the second we stopped pegging our currency in some part to a scarcity asset, this massive debt bubble exploded. And at first, it was actually bad for scarcity assets, right? Because you couldn't really finance an asset that doesn't have cash flow. But then we finance everything with cash flow in the entire world. And now you're seeing the value go back to the scarcity assets.
Now, what was the inspiration behind launching BTGD, and why pair Bitcoin and gold in one fund and not just have them separately?
I think there are assets that oftentimes people own together, but don't really think to rebalance between the two. So I'll take a step back and say, when you're leveraging two different assets in a portfolio like this isn't a new concept. PIMCO has actually been doing this for about 30 years. It's called portable alpha. It's a institutional way to add leverage to a portfolio with built-in diversification. You have much less path dependency than traditional leverage ETFs. There's nothing wrong with traditional leverage ETFs, but you need to be an active day trader to monitor your exposure to that leverage ETF to get your intended leverage target. We take some of that onus off of you and embed it in the fund. And we do that rebalancing right within the fund 3 or 4 times a week based on drift. So you let the assets drift a little bit, It's important to choose two assets that are negatively correlated. And really what we were looking for is two assets that have correlation benefits, but a common theme. And the common theme is scarcity here and currency debasement protection between the two. So it's funny, I've always pictured Bitcoin and gold as very similar, and I've always pictured Bitcoin more like gold than the rest of the crypto market. And I think we're really seeing now the rest of the world respond in a similar fashion with the Stablecoin Act, etc. There's Ethereum, Solana. These are like tech companies. These are like platforms that things are built on. Bitcoin and gold are a store of value. So I actually think in the last couple of months, everything you've seen in the Stablecoin Act, etc., has almost separated Bitcoin from the rest of the crypto space and is pushing Bitcoin further and further towards the concept of gold.
Now, walk me through the primary investment objective of BTGD, because so many ETFs now this year, it's to seek current income, but I think yours is to seek capital appreciation.
Yeah, capital appreciation above all else in this. I think some of the amazing products you've seen in the innovation space in the ETF world of involving income have been fantastic. I think you're going to see in the next year, there's a big separation between derivative income and yield. That is absolutely not yield. You're harvesting the volatility of an asset class, which is fantastic. I think income is more necessary now than ever. Most of the world has been squeezed on their disposable income because of how much printing we've seen. And so you read it online, people are like, hey, I'm buying this income ETF to pay for my car payment and this, that. And honestly, it's like a nice security blanket, right? But I think people can almost get drunk on that income because you're sacrificing growth. Really, the goal is to have as much income as possible in retirement, which means you need to focus on growth today. So this is a fantastic counterpart to that income space to really focus on the growth of your investments and not just monetizing your investments through income.
Now, can you walk me through how BTGD gets the exposure to Bitcoin and gold? Because to my knowledge, it's super hard to have like a stacked asset class like this in this ETF without maybe like derivatives.
Yeah. There's so many different ways you can get leverage in this world. And I think to make this as safe as possible, we actually aren't using leverage in our fund to access it. We're just accessing vehicles that already have leverage embedded into it. So the most of the leverage that we're getting exposure through is using futures in both Bitcoin and gold. Now we'll round that out with a little bit of ETPs in the Bitcoin and gold space. But futures markets is one of the most cost-effective form of leverages you can have in this world. A lot of other leveraged ETFs out there will use swaps. The rate of margin that you pay on swaps can change day to day. It can be 5% one day and 20% the next day. But futures is much more consistent. So we wanted to make sure we were getting cost-effective financing here. And so we get our leverage through futures, and we don't actually have margin on the account. We're not going to get margin called. You're not at risk of anything like that. But using futures, we can offer this exposure that's both 100% Bitcoin and 100% gold at the same time and not sacrifice one for the other. So if you are in that aggressive profile where you have over 70% in equities, you might want to consider a portfolio that has a total 110% exposure, 120% exposure, or even 130% exposure. But don't just leverage up in the same thing. Buy bonds. Bonds haven't done well, but they're going to be a diversifier over long periods of time. Same thing as gold and Bitcoin. You could choose some hedge fund-like products that are available in the ETF space, creating that leverage with diversification. Just like I mentioned with our returns versus our risk, you add the returns, you don't necessarily add the risk when there is diversification benefits between the two. And I think that's the beauty of this asset. This is not one that you need to look and see, oh my gosh, we're in tariff tantrum and Bitcoin's now below 80,000. You need to buy now, right? Well, the world feels like it's going to end. That's a really, really hard purchase to make. And we do that for you. We take care of that for you. So this is an ETF that we like to market as leverage for the long run. Traditional leverage ETFs have this terrible disclosure in the prospectus saying we're intended just for daily use. We don't have that. We're intended to be held, leverage for the long run. We're built to be a tool that you can allocate to, and you don't need to stalk every single day to make sure it's in line with expectations or needs to be rebalanced. And I think this makes it a really good tool set for allocators who, are on top of their investments, but don't necessarily want to watch it like 5 times a day and decide every 2 hours if they're going to be rebalancing.
Since inception, BTGD has significantly outperformed so many ETFs in the market, from the S&P 500, NASDAQ 100, large cap growth ETFs, technology ETFs. Now, why has BTGD outperformed since inception and basically like crushed everything? And What are your thoughts on next year, potentially, of BTGD doing the exact same thing?
Yeah, everyone keeps asking me, okay, BTGD has done so well. What is that future catalyst? And then another thing happens in our government that like erodes the true separation of government and state or government and finances. And you're seeing, the president come in and fire Fed chairmen, et cetera. Every time we push the system a little bit further and we lose our credibility as a country from almost like a soundness of our debt and almost looking at it as like a business. And every time we kind of erode our credibility, that's when Bitcoin and gold do really well. That and any sort of printing that you see in this world. It doesn't have to be the US that prints. It's really anyone that prints. 40% of all dollars in this world were printed since 2020. And on any given 6-month period, whether it's the US or China or Japan or parts in Europe, someone is doing stimulus because most of the growth we've seen over the last 50 years has been on the back of debt. And we are drunk on that debt. And so every time people try to push growth a little bit further through more debt, that might it's almost like pushing a string on the equity markets. But what that doesn't equate to is Bitcoin and gold, because these are true scarcity assets. And what do I mean by scarcity assets? They aren't easily replaced. They don't have new supply every single year that needs to be met with demand. Bitcoin mines at less than 1% a year. Gold mines at less than 2% a year. There's less than 1% increase in supply in Bitcoin each year and less than 2% increase in gold each year. Paper currencies historically print at 7 to 9%. So people ask well, where is the future demand for Bitcoin and gold going to be? It's like there's just perpetually more dollars in this world every single day, every single year. And the growth of assets like Bitcoin and gold just don't grow at that same rate. So that creates that increased demand year after year. That's why even though we've had this massive performance, we still expect a very, very strong next year, 2 years, 3 years, 4 years, because that problem isn't going away, right? It's not like we're going to have actually the thing that will exacerbate this debt problem more than anything would be a recession, right? We have a recession. How do we get out of recession? We print our way out of recession. You think Bitcoin and gold are doing well now. After a recession, when you see that level of printing to try to get us out of the depths of like a recession globally, that's when you're going to see that asset really, really skyrocket.
The topic of diversification is super important for investors. Now, I was at a dinner with Wolf Financial, so on your screen, you were going to see Wolf Financial have BTGD, and even myself, I also own, as a disclaimer, this ETF of BTGD. Now, the reason why I'm bringing up diversification is because so many investors, even myself at one point, was on to large cap stocks only.
Yeah.
Now I am adding diversification with gold and as well as Bitcoin in terms of adding BTGD. Now, do you think it's super crucial that investors think about adding something like maybe BTGD or even Bitcoin and gold in their portfolio if they don't have exposure to it?
Absolutely. I mean, this is not financial advice. You should absolutely speak to a financial advisor. But the S&P 500 has had a monumental run here for the last 15 to 20 years. To expect that it will continue at this pace going forward is somewhat irrational. Some level of diversification, international stocks, buying cheap value stocks, and adding, again, scarcity assets. The quantitative easing we've seen in the last 15 years very much supported equities on the way up. But that gets harder and harder to continue to work in this system. Because, if you look at, for example, like MicroStrategy, what are people criticizing MicroStrategy about now? It's like, well, there's C-level executives that have to get paid. They have options. They have debt that they need to pay out now, and they need to monetize these assets. And that's why we always feel going to the actual commodity itself is the purest form of exposure to those commodities. Yes, in certain instances, you can get higher beta upside by trying to time gold miners, for example. But when you actually see that market collapse and equities pull back, that's when you will really hope you have exposure to that pure asset itself and not the derivative off that asset. So for us, this is a way to, again, why choose between Bitcoin and gold? And I think so many people are making that choice right now. And this is a vehicle to offer both. And it doesn't mean that Bitcoin needs to outperform gold or gold needs to outperform Bitcoin. The beauty of this vehicle is that they just need to collectively outpace the cost of financing, which is less than 5% a year right now. So as long as the combined basket can outperform 5% the cost of financing, this should be a vehicle that does very well for the foreseeable future.
Now, this is not financial advice, but give me like a price target you have for Bitcoin next year and maybe how you think gold should play out next year.
Yeah, well, actually, I'll start with gold because we saw really interesting stretch over the last 3 months where gold kind of traded sideways and we saw people kind of forget about gold. And it's infrequent that you see an asset that's pretty much at or near its all-time high, and then all of a sudden the world kind of stops talking about it. I was on another show a couple weeks ago and we were arguing benefits or negatives of gold, and I actually got very bullish there because you attacked allocators who almost were like looking past gold because it really hasn't moved in the last 3 months. And I think now we're seeing this consolidation move up. I think Goldman just came out with a report saying that gold could get as high as 4,000, 4,500 next year. And again, it doesn't have to outpace Bitcoin. It just has to outpace the cost of financing, that 5% rate. So as long as it hits that hurdle, it's going to be additive to BTGD versus just owning Bitcoin individually. So I think, you could see gold in the 4,000, 4,500 range. Bitcoin is harder to target because it moves so fast. I think 145 to like 185 is very doable in the next 12 months, but there's going to be volatility. And that's why you do have to rebalance it. Either you have to rebalance it yourself or you need to prepackage it in a vehicle that's going to rebalance it for you, because you need to be trimming a little bit on the way up and buying on the way down. And that's just sound portfolio management. I think a lot of people owned Bitcoin and just kind of YOLO'd it, and they did really, really well with that. But now's the time to actually look at it as a more mature asset class in your portfolio and actually build a philosophy around rebalancing it in your portfolio, or allocate to someone that will do that for you.
Do you think that BTGD is a long-term buy and hold ETF?
Yes, it's designed fully to be a buy and hold ETF, and that's why we use the phrase leverage for the long run. As you alluded to, we're one of the best performing ETFs since our inception in October last year. And again, the scarcity profile of both these assets, I think, allows us to be in the running of performing very, very strongly against pretty much all asset classes over the next 1 year, 3 year, 5 year, 10 year. That situation isn't going away. It's only going to get worse. We're only going to inflate and push more debt into the system. People asked us when we first launched the ETF, like, what is the biggest risk to the ETF? I said, well, the government cleaning up their balance sheet and their deficits. So basically the Doge task force was the biggest risk to this ETF. Gold and Bitcoin can do well in inflationary, deflationary, recessionary environments, etc. Really, if we clean up our balance sheet, is the one situation that honestly I would start to sweat for both Bitcoin and gold. And that has come and passed, right? Nobody talks about Doge anymore because it kind of got proven to be completely ineffective. And why is that? Because our elected officials, while they might see the greater problem, they got elected from their constituents. And the last thing they want to do is say, we're going to pull money from you. Hey, you elected me, and my solution to help you is to provide you less funding, right? That's what you need for us to clean up our balance sheet. And nobody in the political world seems capable or willing to do that.
Would you consider BTGD to be safer than a traditional, like, only Bitcoin ETF? Because you do have gold, which is typically a safe haven, like a safer asset class in, recessionary environments, stock market crashes, and just pretty much every market environment to my knowledge.
Yeah. So since we launched, the volatility on Bitcoin related ETFs has been about 48% a year. And the volatility on gold related ETFs has been about 18% a year. BTGD's volatility has been right around 52. So we're certainly a little more volatile than just Bitcoin, but not by a significant amount. And a lot of that added volatility you're seeing on the upside. So that's good volatility. Volatility is sometimes a very good thing. And in fact, when you've seen massive drawdowns in Bitcoin and you've seen crypto winters, that's when this strategy really shines. Obviously, we just launched last year, so we haven't actually been alive through a crypto winter. But in doing backtests, you can see gold actually holds up exceptionally well during those drawdowns. We have a chart on our website and a paper called The Case for Bitcoin and Gold on quantifyfunds.com, where we show how gold performs at each 15% drawdown in Bitcoin. And that's the magic of stacking two different assets on top of each other, specifically two different assets that their correlation benefits hold in the face of volatility. So many times you say, U.S. stocks are diversified to international stocks, but when all hell breaks loose in markets, they kind of all go down in tandem, right? That's not necessarily the case with Bitcoin and gold, right? Bitcoin might have some beta to risk assets, might pull down in a volatile moment where equities are going down. Traditionally, that's a moment when gold shines. So again, choosing these two assets that have a similar investment theme in scarcity, hedge against currency debasement, but that will not move in lockstep when volatility falls. So yes, we are slightly more volatile than just Bitcoin, but almost all that increased volatility is coming on the upside.
What kind of allocations should investors be thinking about when allocating an ETF like BTGD, which has both gold and Bitcoin, where people say 5% Bitcoin or 2% Bitcoin and gold is like 5 to 10%. But now we have both of them in this one fund. So this is like not financial advice, but what kind of like allocation should investors be thinking about if they are like an aggressive investor, conservative investor, maybe they just want exposure to both Bitcoin and gold with this ETF of BTGD?
Yeah, again, not financial advice, but based on the volatility profiles of these two assets, you could argue that a 5 to 15% allocation to Bitcoin or a 5 to 25% allocation to gold could be warranted in your portfolio. We see more and more practitioners use gold instead of bonds, instead of treasuries, instead of ag as their risk-off asset. So anywhere between 5 and 20, 25% of either one of these assets. So obviously, 5, 15% of BTGD is a way to do that in a very efficient manner that doesn't take up the entire portion of your portfolio. All of a sudden you start doing the math and you're like, well, 15 here, that's 30. I need an equity slice of our portfolio, especially for someone like yourself who's younger, who's looking for that growth in their portfolio. Like you start having to make serious sacrifices. And the beauty of Portable Alpha, structured leverage ETF leveraging two different assets classes, it allows you to get both without making that sacrifice. You don't need to sacrifice as much equities. So I think anywhere between like a 5 and 15% allocation, something like BTGD could be warranted depending on your risk profile, obviously. If you're a very conservative investor right near retirement and you only have about 40% equities, you should probably still have some Bitcoin and gold, but you probably don't need it with leverage. But for anyone who has over 60, 70, 80% of their portfolio in equities, that's when you really need to start thinking about intelligent leverage in your portfolio. And, we're one of a few companies that offer Portable Alpha ETFs that are leveraging two different assets on top of each other. And again, I'm exceptionally biased, but I think the best pair you can find out there is Bitcoin and gold because their scarcity profiles are not going to change. We're not going to all of a sudden find a massive supply in gold in this world that we never knew existed. People have been looking for gold for centuries, right? Bitcoin is mathematically set to have every 4 years. In 3 more years, we're going to go from 86 basis points of new supply down to 43 basis points. And that's just going to continue to cut in half every 4 years. So as the adoption grows, the supply gets constrained even further, which is the asymmetric upside potential of this. And I think a lot of people look at Bitcoin and they're like, I missed it. I'm waiting for it to pull back. But they don't realize like it almost gets more and more supply constrained as time goes on. And if our debt situation continues to get worse and worse, we're just going to print at a faster and faster rate. All of a sudden, you could be in a world where, instead of printing 7 to 9% of currencies around the world, we're at like 15%. And in a couple of years, Bitcoin's halving happens, and we're now printing less than 0.5% of new Bitcoin a year. Well, 15% new currencies, less than 0.5% of new Bitcoin. You can do the math. There's just so many new dollars printed that are looking to go somewhere and store value somewhere. And this is one of the best options for that.
In terms of how to buy Bitcoin and gold, this is once again not financial advice, but I buy BTGD weekly now, be allocating like every week, every month, maybe like buying every day, maybe not BTGD, but just like Bitcoin and gold, because for example, for me, I'm super late to the game. I feel like I'm buying Bitcoin and gold right now at all-time highs, it seems like. But how should investors be thinking about allocating their cash to Bitcoin and gold and just buying in and getting that exposure? Is it going to be like weekly, monthly on a huge dip in a recession and the stock market crash, or just whenever they have the cash?
How to allocate your capital falls into 2 buckets. One is you have fresh capital from income earned, and how do you put that into the market? As you alluded to, you can invest that every week, every 2 weeks, once a month. I would say set a portfolio and just rebalance that portfolio every time you invest. So if you're 80% stocks and 5% BTGD and whatever else you have in your portfolio, just put that fresh capital work to rebalance to those targets, right? And allows you to unemotionally just like drip assets into the market. And that's most valuable when there's a lot of volatility on the downside. What you want to do is not have to make a lot of decisions when there's a lot of volatility. You want the decision is, do I invest this cash? Not like, okay, now what do I buy this and that? Okay, well, if you're just trying to rebalance your portfolio, whatever's down the most, that fresh pool of capital is going to over allocate to that. And it's going to allow you to do that unemotionally. And I think removing the emotion from this is very, very important. But not stocks are also at an all-time high, as is real estate. Pretty much every asset in this world is an all-time high except for treasury bonds. And that's because we keep eroding the value of those treasury bonds. But you have to keep purchasing because this is how this system works. The dollar is intended to lose 99% of its value over every 100-year period. And you need to actually invest in risk assets to keep any store of wealth that you've generated from all your hard-earned dollars. So I think just building a static portfolio that you can just press go every week, every 2 weeks, once a month, whatever your cadence is, and just like unemotionally put money into those asset classes. And there will be a period where Bitcoin has a big drawdown. And guess what? If you're just rebalancing to your portfolio, that's when unemotionally you'll put that money in and they'll just over allocate to that asset class to try to get you back to your balanced allocation. And it'll do that difficult work for you, right? So whether it doesn't necessarily have to be weekly, but I think almost the cadence of making yourself feel cash poor is a beautiful thing in this world. Don't leave a lot of money in checking savings, enough to feel comfortable and a little bit of a safety net, but then force yourself to invest everything else. It'll keep your spending down and it'll allow you to accumulate wealth faster than you could ever imagine. I think especially young people really don't truly feel the effects of compounding until it's almost too late. And all of a sudden they're 35, 40 and they're like, oh, wow, if I would have done this 20 years ago and been really diligent, the nest egg that you would have built would be absolutely monumental. And I think that's why, your show and individuals who are watching the show and such as yourselves, like you guys are doing such a great service to this community to show them that you need to, even if it's $50 a week, $100 a week, it doesn't matter how little it is, like just put a little bit away and you'll be able to grow that over time. And all of a sudden start investing more and more each week, each month, whatever the case may be, but build that discipline now, even when it's just small dollars, and it'll pay dividends till the end of time for you. So
2026 is almost upon us. Now, everybody knows that I like to cover some of the best performing ETFs. So I think I did a good job this year, but now I'm going to be the first one to go next year, where I think that this ETF, BTGD, could be one of the best performing funds. I also like large cap stocks. I like large cap growth ETFs, just pretty much anything that has like technology. Yeah. But now I also like this fund a lot. So what makes you excited for next year?
Yeah, I think when we first came out with this ETF and we were using phrases such as prepackaged currency debasement, like it didn't really resonate with people. And it wasn't until we saw this attempt to fix our balance sheet and then totally failed at that and said, well, that was a nice try. Let's move past that and just start printing again, that people started realizing they really needed to take this currency debasement hedge seriously. And I don't think that's going to change. I mean, look, we're talking about rate cuts happening in the next couple weeks. You saw employment numbers really push that narrative where assets are all-time high, Bitcoin, gold, stocks, everything's at an all-time high, and we're about to cut rates, right? That's just more of this system just continuing to this cycle of just printing assets. Like that, everyone always thought before interest rates spiked that the worst thing that could happen to gold was high interest rates. Why? Because it's an asset that doesn't derive income. Well, if all of a sudden you can make 5% of your savings account, why would I ever allocate to gold? That's what people always thought for the last 10 years. People were terrified of higher rates. Guess what? We just saw the highest rate environment we've seen in the last 20 years. And it coincided with this massive rally in both Bitcoin and gold that don't have any income derived off of themselves individually at all whatsoever. So what happens if we actually start cutting rates into that world? The potential upside for those assets is monumental in that space. And if we do see some volatility in the equity markets, the only response we have, the only playbook we have is to print more. Right. So the second derivative response of like an equity drawdown is scarcity assets inflate at levels like we've never seen before. So obviously there's chances of volatility in the market with potential drawdowns, et cetera. But I love these assets because those drawdowns just mean more credibility for both of these assets. We're just going to further erode the value of our currency to get out of any situation we've seen. And honestly, I spent most of the 2010s like really just frustrated at the markets. So I was like, quantitative easing is basically like a broken Excel formula. It's like an error loop where you're like, okay, so you own this, but you are buying this. You're like this. So like, you're just buying your own debt, right? Like, okay, it was a broken Excel equation, right? Bitcoin and gold solve that, right? Like that's what's putting these governments in check is Bitcoin and gold. And you're seeing in response to it that Governments hold reserves so they can have spending in last resorts, and oftentimes they would do that in U.S. dollars or hold certain commodities that their country might need. But people don't want to hold U.S. dollars and U.S. debt anymore. As we alluded to, you're seeing Russia buy more gold than ever before, and you're seeing central banks in general around the world buy more gold than ever before, and you're starting to see some accumulate small positions in Bitcoin as well. And we think that's only going to increase over time. So once the issuers of currencies and debt around the world are themselves terrified of everyone's currencies and debts and they're buying Bitcoin and gold, like that should tell you something. Like the asset they find that has the most scarcity profile is Bitcoin and gold. And you should beat them to that punch and allocate your portfolio accordingly so you can get ahead of that. And so that's why I think 2025, 2026, 2027, it doesn't really matter the time frame over the long run. These assets don't need to hit earnings numbers to perform. They don't need to come up with new innovation to perform. They don't need to have all-time margins to perform. All they have to do is not print at an exceptional rate to hold their value. They're not amazing assets. They're just better alternatives than what we have out there. We've destroyed the concept of our debt, the dollar. Bonds used to be the diversifier to your portfolio for a 30, 40, 50-year period. They were phenomenal diversifiers to your portfolio. And if you think of the traditional allocators or advisors models where they're allocating to a benchmark of, let's say, 60% equities and 40% bonds, like that has been a disastrous benchmark. And has cost so much in returns by not having some sort of scarcity profile assets in that portfolio. So again, incredibly biased, but I think Bitcoin and gold can do exceptionally well in 2026 and continue on for a very long time, because we're not going to fix our debt situation anytime soon. And the only way out of recessions is just more debt. So every time the system gets put into a crunch, they're going to print their way out of it because politicians are beholden to their constituents today. Our government is such that politicians will only do things that show value in 1 to 2 year cycles. Why is that? That's because they have to get elected in 2 to 4 year cycles. That means halfway through their position, they need to go back to the constituents and say, do you see how good I've done? This is why you need to reelect me. We can't fix this debt situation in a 1 to 2 year period. And so nobody is really planning these initiatives that will benefit our country long term, because candidly, they can't run on those election points. It's unfortunate, right? I really wish we lived in a world where we weren't destroying the value. Like that's the reason why you feel crunched with your disposable income, is because we've kind of pushed debt into every corner of this economy, and we've eroded the value of your dollars. You're sitting there thinking like your savings account is safe just because it's not moving in dollars, but couldn't be further from the truth. The dollars you're sitting on in your savings account are just eroding dollar value day after day. You might not feel or see the volatility, but you look back over a 3, 5, 10-year period and all the value is gone.
Thank you so much, Mr. David Jacansky, the founder of Quantified Funds. Now, be sure, guys, to check out the link in the description of this video, where you'll see myself as well as Wolf Financial, our portfolios, and whenever we buy BTGD, it'll all be for free in the link in the description. Now, if you guys like this video, please give it a like, because this Keep Up You did. And don't forget to check out our full interview with Mr. David Jacansky about this ETF, which is one of the best performing funds of this year. And it could be potentially not financial advice next year on your screen right now. I love you guys so much. Crushing the stock market, and take it easy. Peace.